Welcome back, and joining us for a look at what moved markets today is Cremen from Adviceworx. Thank you so much for your time, Caroline. Quite a lot of volatility in the markets over the last few days. Of course, we are seeing a rebound today, or the market's trying to make a rebound today, except for the JSE after that inflation-induced sell-off that we saw yesterday. Just, the panic that we saw yesterday, was this a much-needed correction after those record highs in the US, or an overreaction?
Yeah, look, I think there was a little bit of reality setting in. I think, I've spoken about it a while. It's people just really ignored what the Fed and Fed officials were saying about when they kind of anticipated decreasing interest rates. And for them, it was always towards the latter half of the first half of 2024. And even the IMF came out and said that they expect interest rates in the US to only start to come down in the second half of the year. So the market, of course, ignored that from the end of last year and went charging ahead. And we saw that big uptick in the market and people realizing now the Fed is not probably going to be decreasing interest rates in March and May and only likely in June. So we're getting, like I said, it's a dose of reality set in.
Yeah, all right. Well, let's take a look at what is happening back here at home. Of course, on the economic data front, we did get retail sales for December coming out, increasing 2.7% year on year. Of course, this was more than the 0.7% decrease that the market was anticipating. It does corroborate with what the retailers have been posting lately, doesn't it?
Yeah, look, the retailers have been posting, but they haven't, they've been up for the most part, but it hasn't been great. So I think it's actually been quite a surprise over the last year, in fact, that the South African, consumer is a little bit more resilient than I think a lot of people anticipated. Whether that's going to last into 2024, is possibly debatable. I think our inflation is probably proving to be a little bit stickier than people anticipated. But so far so good. I also, do question, if you have a look at, you're still seeing retrenchments and things coming through. You're seeing, the food prices not coming down materially. So I don't want to be the negative Nelly, but
No, I hear you.
I'm glad it happened, but
I hear you. Listen, I think you do need some perspective, because as much as we did get this increase in December, when you look at the overall action in 2023, retail sales did decrease compared to 2022. So it's going to be quite interesting to see how consumers do in 2024. Let's go into gold. Let's go into gold. And actually, we saw that the gold price actually reduced a lot today, even though you did have two gold counters coming out with shiny results. So also putting pressure on those stocks. Let's start off with DRD gold. So top line up 12% and the bottom line increasing by 10%. Is it a gold rush?
I don't know if it's ever a gold rush. Gold is something that you really need to trade. Buy when it's down and sell when it's high. But both of these guys, it was the right time for them, DRD Gold and Pan African Resources. They both have benefited over the period with the gold price being higher and also with the rand being lower. So they took full advantage of it. DRD, this is a nice little company, really. If we were in a better economic situation, this is the type of company people would be looking to add to a dividend portfolio. But because during most periods, this company has been very, very consistent with their dividends. I think again, just looking for from an economic basis, output was okay. The results are good, but output was down, and they do cite with the higher costs of electricity and diesel. These guys are very capital intensive, so if they're not going to have the tailwinds of a good gold price and a weaker rand, they're going to get that full impact of the South African electricity tax on them. But I think they're well positioned to actually deal with it.
Yeah, really fascinating. Well. The 17th straight year of uninterrupted dividend payments.
Absolutely amazing.
Yeah. You talk about DRD Gold and the lower production that they experienced and the higher costs. But it seems that for Pan-African, that was actually the opposite. We did see an increase in production and a reduction in all-in sustaining costs. What did you make of those numbers from Pan-African?
Well, I thought it was actually quite interesting, and I think I'd like to explore a little bit more. It does seem as if they were a little bit more effective at cutting costs.
Yeah.
So that doesn't necessarily make them more efficient than DRD. I think DRD had made those changes and is still making those changes up until this point. It's not. It's a relatively lean operation for a gold miner.
Yeah.
So Pan-African did actually manage to do that, but to increase the cash position like that, the headline earnings up 46% for a miner, and so it was very good. I mean, I was impressed with both of them. Really was. I'm not a gold company fan. So
but those ones.
People who know me are falling over.
Also quite interesting to see that share price, because Pan-African actually got most of the beating today. It was down 3%, but I see now that it is up almost 0.5%. Well, let's get to your stock pick for today, Caroline. What will it be?
Okay, so it's going to be a commodity company again, and not gold this time, oil. It's called EOG Resources. It's an offshore company, American company, and it really does exploration and development of oil resources. It's really, when we look at a market, we talk about them, is actually quite expensive at the moment. This share is down about 15% for the year, but it has a 3.5% dividend yield. And it's only got a PE of about 9. So this is not a company that's expensive. This is a company really that does, I'd say it's one of those companies that prints cash.
Okay.
It really does. Gold, oil and gas are not going away, and certainly the development thereof is going to become a feature, especially in the US. So not a high growth stock, but a nice dividend player that you're getting at a decent valuation, and there's not a lot of that out there right now.
All right. Well, thank you so much for your time and for your analysis on what has moved markets today, Caroline. That was Caroline Cremen from Adviceworx.